Now we turn to exports in the international market because we want to look at where do we sit in that current environment. And before we get into it, again, I'd like to remind you, please like, share, subscribe. I know I get tired of saying that as well as you probably get tired of hearing it, but just as a reminder, that's always a positive. So when we look at just exports in general, let's just talk about, the products before we get into oil. So gasoline was up a small 14,000 barrels a day to about 677. It's still down versus year over year, but about 50,000 above that 5-year average. That's something that we think is going to, again, trend down slightly, but flattish in general, but we should see a little bit of a pressure. Disti's the one that, was down another 58,000 barrels a day, and we'll see a bit more of a decline. And for those that maybe aren't watching the whole thing or bouncing around a bit, when we look at toll miles in Europe, we saw toll miles actually come down week on week as some of these COVID cases increased. We saw an extension of lockdowns in specific regions, and now India is rumored to say that there's 300,000 new cases in India, which again is just showing how the moves are becoming exponential, which is just going to limit the amount of demand in the market, as India has already started to defer crude cargoes, as well as starting to increase some exports as they cut runs. So again, this is going to shift kind of where some of these flows are. That takes time. This isn't something where we snap our fingers and flows stop, but that's just looking into the future as we look out over the next 6 to 8 weeks. That's going to adjust kind of where some of these shifts are. So that's going to put additional pressure on distillate when we look at slowdowns in Europe, especially on the diesel side, and then pressure as things come across. So those are going to be keys coming into it now, just to put some of the weakness in general. I just found the article. So Italy was down 43% versus 39% a week earlier, which is the weakest since December. So Italy's slowing. Spain is negative 47% versus negative 34%, weakest since June. And France is flat at negative 47% versus negative 47% a week earlier. So we're seeing some of these mitigations. So the Easter period in 2019 was from April 19th to 22nd, meaning some comparisons may be weaker. So depending on where the comparisons are when we look at versus last year, you're just, there's Easter's a moving target, it doesn't fall on the same Sunday. So again, this is going to just shift. But again, this is just the kind of where we're seeing in general is the decline in toll road usage in Italy, France, and Spain versus 2019 levels exceeded 40% in total. So that's just going to limit the amount of disti that we're seeing. So we're just not seeing those flows, which again are hitting some multi-year lows from the U.S. into Europe. Now, on the jet side, fairly stable, not much. The propane one is the one that's the most exciting. That had a nice recovery where rose 537,000 barrels a day. Based, as we said last week and the week before, the arbitrage into Japan reopened and opened pretty aggressively. Now, as condensate versus propane, it actually makes sense to switch from naphtha into propane or LPG, just to clarify. So when we look at the switches, I think that's going to be supportive of some of these additional flows as that ARB has opened up a bit. And we talk about that in our report that's coming out on Friday. So then when we look at U.S. exports, they were down 31,000 barrels, sitting now at 2.55 versus last week of 2.57. Again, this is the pressure that we're seeing. Now, as we go into this week, it should remain low. We've been seeing spikes at the last week of the month and the first few days of the new month. So we should see this remain fairly soft and then maybe get a little bit of a spike as timing becomes a key component. But again, that's going to keep exports soft. Gunvor sold 100,000 tons of Urals from May 9th to 13th delivery to Total at dated Brent negative $2.30, which is slightly up from $2.40 on Monday. So again, this is the Libya coming off, but we're still, and when we look at Brent versus LLS, things have essentially tightened a bit. Right now we're at about $1.70. So these are going to be those things that, again, how do we compete into Europe? Because Europe is going to become a we continue to see pressure with little demand for U.S. crude. So now as we go into, some of those averages, when we look at gasoline, we were expecting a little bit of a further drop to the 9-year average. Instead, we had a small increase. We still think the trend is going to be fairly, down, not going to be a huge drop, but again, some of those movements towards or drifting towards the 9-year average. Distillate, same thing. Well, we expected to be a little bit closer to the bottom of that cloud. We're still trending in the downward move, and it's just something that we think is going to continue to see those headwinds. Gasoline could see a little bit of a support just because gasoline does have a shelf life. So as you're sitting on winter grade, how long have you been sitting on it, and does it make sense to try to push it into the market as methanol, prices are favorable, so you can buy some cheaper gas, use methanol to enrich it as long as you're allowed to, depending on where you are, obviously. So that could move some gasoline, but diesel and distillate in general is going to be some of those headwinds. Now, when we look at crude exports, again, we think it's just going to be this to the right movement, just because not only just timing, we just don't see some of these surges coming. We will get some rally or some increases into the end of the month, first week of May, but we still have some time for that. Here you can see we're back to the highs that we achieved from last week, and those beautiful timing delays. Last year it was last week, this year it's this week. So again, we're still going to maintain, either at the top of the cloud, setting new records, seasonal records, or at least just below the top, just based on where the arbitrage is right now. This is showing the Genscape move. So we had some big builds. We didn't expect last week's big build. We expected a little bit of a moderation. So when you average it out, this is kind of where we thought, just going flat at this point. Here you can see that typically we get this decent drop. So again, it's something where we think that's going to climb up a bit. Rotterdam was the biggest driver. So I think we dropped about 3.8 with 2.9 being Rotterdam. This is just going to be those timing delays that we keep talking about. As China imports, now let's turn to China. So import oil continued up, still off the highs, but again, still seasonally adjusted at a strong level. But when we look at imports, we always have to look at what's happening on the export side of the products, because we showed this last week. Now let's look at what products did. So here you can see diesel still at essentially the highs from 2020. So this huge spike is 2020. We're still seeing it. It's still being fairly strong in general. So again, this is something that we expect a decline in May. This is from March. So in April, because we did get turnarounds. So as you had turnarounds, which are now starting to abate, which we'll talk about at a little bit later. So we're starting to get runs coming back, which will pull through more. So we'll see some declines in exports, and then we'll start to see those things escalate again as diesel continues to get pushed into the market. Now, gasoline normalized a bit. We didn't hit the levels that we had last year, but we're still, at near all-time highs on gasoline exports. So then when we talk to we didn't talk to them, but when the companies speak, they're talking about how they want to see refined product exports increase 34% year over year. So again, that we're going to see this continuous growth on the export side of products. So when you look, you might say, yay, more oil imports. Well, what is happening with refined product exports? Because that will take market share from other entities within not only just Asia, but also the broader market. And it's, India buying a lot less as demand had a big move down, specifically on gasoline. So diesel never really got back to where it was. So now we're coming back to, this is the new low for 2021 in terms of diesel sales and demand. But when we look at gasoline, you can see the big drop. And now we have a short-term lockdown within the largest district of India. That is supposed to last only 7 days. Given the rate of change of the COVID cases, it's unlikely it only is 7 days. So again, that's going to put more pressure on gasoline, more pressure on diesel, which is going to push more not only into the international market, but also reduce total oil demand coming into India, as we said in segment 1, where people are just running less crude. We've already seen about 400,000 barrels come out of the market on run cuts, and we don't see that really adjusting anytime soon over the next few weeks. Here's looking at South Korea, as we talked about, because it's not only just India, it's also South Korea. So we see now through the 16th, and it continued to go up, that COVID cases are shifting higher. Vaccines doses still remain very low, and it's impacting essentially transport and just general activity within South Korea. And the same can be said about Japan. Now, Japan, because of the refinery hiccups that they have, and because there is enough product on the market, you can see that Japan is now taking some of these refined products, or as they call them, petroleum spirits, which is rising to the highest since August of 2000. Now, one of the things that we've been talking about for the last several years, Japan decided not to upgrade their system. So they were always going to be hitting the market more aggressively for refined products, because they chose to, based on what China was doing, well, we still need some refining capacity for our own security, but there's going to be more product available, and it's probably going to be cheaper to buy it on the international market than to make it ourselves. And so now you had obviously supply disruptions with fires and earthquakes, but you also have that little piece behind it. So again, but at the same time, oil imports will go down, refined product imports will go up. China oil imports will go up, refined products exports will go up, and this is going to be one of those landing zones. And just to put India into context, just when we look at the active cases in general, so the lockdown index is going higher again, and that's going to put additional pressure on just what the activity looks like within India, which is going to put pressure on what are those flows do. And then just looking at Japan, so just to put it into context, the additional cases that continue to come through, which is just adjusting, what are people doing in Tokyo in general, and this is now throwing the Olympics back into question. Again, these are those pressures that we continue to see within Asia that is weakening some of those demand levels. So then when we talk about Fujairah, so light distillates had another drop, which is a positive, but middle distillate and then heavy disti actually had some decent increases. So total stocks rose 2.6 million barrels, which is 13.5% week on week. Light distillate saw a draw of 529,000 barrels, a drop of 8.8% to which is the third consecutive week and the lowest level since November 9th of last year. So the East Suez gasoline market remained under pressure with those lockdowns increasing. So that's, again, we still continue to see those pressures in general, which is just going to weigh on what some of those movements are, because New Delhi, entering 6-day lockdown from the evening of April 19th. So obviously that's going to continue. But in the spot market, so Indian private refiner emerged to offer up to 60,000 metric tons of 92 RON gasoline. So we're going to start to see India trying to dump some of this additional gas and refined products in general, which will end up in Singapore and Fujairah. Or at least the displacement is going to push more in there. So we still think that light distillates is going to continue to go up, even though this was a nice surprise to the downside. Now, in the middle disti side, we had a rise of 146,000 barrels, which is up 4.7%. And the gas oil market, again, the regional demand shifts are mixed, where we continue to see an increase in refined product in storage on the Middle Eastern side. But we do have some African demand rising, but again, that Indian demand and Asian demand continues to be under a bit of pressure. So then when we look at the resid side, so stocks of heavy resids rose by 2.95 million, which is 29.5% week on week, is the highest level since September 7th last year. And it's coming into what are happening with bunker sales. You did have the Easter slowdowns. You had some shipments movement, but now we're actually starting to see some shipping increases. So we should see middle distillate and light distillate continue to grind up, and we should see resids start to move down just by the levels, because you can see it can be very lumpy. It's just going to be, what does that average look like? Now, when we shift to the export world, you can see Nigeria has steadily increased some of their exports through May. Norway, we're starting to come out of that maintenance season. Again, starting to see some of those increases into May. Russia is actually taking their levels up again. So we should see May be above April as some of those movements, with Angola increasing from May into June. Libya pulled back a bit. So they've been averaging anywhere between 1.15 and 1.2. Right now, they're at about 835,000. They should get to about 1 million, because right now the impacts are about 200,000 barrels a day. So based on how long that force majeure is in place will impact what levels can they hit for May. So right now, let's say that it's a fair assessment to assume that we're going to be at about between 900 and 1 million at this point. And just to put it, some of the physical market into context, so Chevron offered 1 million of Nigeria's Pennington crude for June 7th to 13th delivery at $1.13 more than dated Brent, which is a discount from $1.28 that was initially there. So again, you're starting to see a little bit of a decline. Gunvor is offering 100,000 tons of Urals at a $2.35 discount to dated Brent. And then Vital offered Urals May 4th to 8th delivery at a negative $2.30. Again, that's right around where it's been trading at about 225 to 240, negative 225 to negative 240. And then when we look at other things that are happening in general, so Rotterdam, right now the discounts are for April 16th are sitting at about 250 to 255. Where when we look at CPC, they continue to print at the lows at about $3.25, $3.20 off dated. That's something that's increased a touch. When we talk about what's happened with Russia, Russia will export a total of 1,500,000 ton cargoes from Urals, which is from 2 Baltic ports, but from May 1st to 10th. Again, that's higher than the 12 a month earlier, which is why we continue to see that pressure to the upside. So that'll keep some of these flows capped. ESPO saw a bit more movements, but Middle Eastern cargoes continue to trade at some premium, some discounts, as we showed earlier with Urals CPC. And again, West Africa still struggling a bit to clear, with Congo still not able to get into the market, and Nigeria and Angola still having cargoes available. That's pushing more crude oil on the water. So you can see that we're starting to move back up towards this 5-year average. And it's a mixture of two different things. So right now, oil in transit starting to bounce back up. You can see that there's been that slowdown. China was in turnaround. India continues to be sluggish and slowing or defer or reoffer cargoes. But this is going to start to move back up as we do have more cargoes going into motion at this point. But with that being said, oil and floating storage continues to grind higher. We're now back to close to the highs that we achieved in early Jan. So the amount of crude on oil held in storage is up to 112 million barrels. And that's up 3.4% from on April 9th. So you can see, again, moving up in the wrong direction. And it's being driven based on a lot of residual being left in West Africa as well as Asia. So when we look at inventories in general, so when we look at Europe, here you can see gasoline still remaining elevated. That doesn't seem to change this week. Gas oil continued to trend lower, where fuel oil actually had a big increase. So we should see that swap a bit. But here you can see gas oil still trending below that 13-year average, which again is why they're trying to manage that in general as they do start to bring on some new facilities. But they're not going to close the gap until at least next year when we think about flows on refinery run rates. So when we look at gasoline started to turn back up, moving back to those seasonally adjusted highs, top of the cloud. It's, driving still remains weak. And now that the ARB is closed, and it's still open, but not to the same level, you're going to start to see some of the slowdowns, which will put more more gasoline into storage. And I think this is an important chart to look at fuel oil, because here you can see that we're moving back to the all-time highs of fuel oil in storage in Europe, which is why, again, they're trying to manage what some of those flows look like on the aggregate level. Then when we look at Singapore, you can see that the total products are back to a seasonally adjusted high. We continue to get these movements up. We saw increases across the board, which is going to continue to see pressure because of India. So then when we look at middle distillates, you're seeing it moving back up. Now, it's counter-seasonal when we look at the 13-year average, but when we look at the top of the cloud, it's not unheard of. So just this is something that we think is going to see more pressure, obviously, given the issues within Asia. And the same can be said for light distillates as they continue to see builds, coming back into that seasonally adjusted high, seasonally adjusted low. And we think that we're going to continue to see that trend up. Now, with all that being said, we did have time spreads getting better. It's going to be interesting because we had some fairly positive news out of Iran, and I talked about it on the pregame show. Because again, they keep saying that we're at 60 to 70% of the way there on the nuclear deal, but that last 5% could take another 2 years to solve. So that's where we started to get some love back into some of the time spreads, which is a net positive for kind of where we sit right now on crude pricing. So we are getting some of that. We still had some of that physical weakness, but it got better. So it was less weak. It's still weak, but it's less bad. So because of that, you did get some of this residual pop. But with that being said, you're starting to see some of these roll over in terms of where things are going in general. So we're starting to see some of this roll in Singapore, and just based on the pressure in general, we don't see that stopping anytime soon. And we think we're going to push back to the lows, which when you look at what's happening in Singapore, Dubai hydrocracking refinery margins, this is again at the seasonally adjusted all-time lows over the last 5 years, which is just going to see more pressure because of India in general. So then we look at Urals and the margins in general. So here, which is again why we're starting to see some of these discounts, you're starting to see some of the pressure come into to Ural margin. But hydrocracking still remains some of the better side of the equation. So again, we're still going to see some of this activity remain stable. We're starting to see a little bit more pull through. But as Ural's pricing gets a little bit tighter, again, that'll start to weigh on activity. And then here you can see just in terms of where things are going in the med, things are getting a little bit better on the hydroskimming side, and it comes down to, where are the margins on gasoline. So as some of this gets a little bit better, maybe we see a bit more gasoline, which it might be a little hard just given where current flows are into the U.S. and where storage remains. Now, some more imports coming into China as we come out of turnarounds. But it's important to appreciate what is happening in general. So the state-owned refiners are starting to ramp up. You can see some of these run rates starting to turn up. But at the same time, Shandong is coming down. Now, as we said last week, we're seeing more and more pressure and investigations into the independent refiners, which is usually what they want to do when they want to force them to slow and have the state refiners push higher. So again, those are some of the shifts in general with some of the activity going from the independents into the state refiners. So we shouldn't see too much of an increase. It should kind of be steady state at this point in time. Asia floating storage moving higher, given more things indicating China, more issues into India and South Korea, Japan. This is going to leave more crude on the water, which this will continue to drift higher. North Sea, again, we see as some of the maintenance work ends, this will continue to push a little bit to the upside in general. So that'll be something that, again, will continue to shift things up, but still follow that 5-year average. West Africa, as we were saying, we were going to get a big spike, and here it is. We should see a bit of a normalization, but India has been a big buyer of West African crude, and now that they're going away, the teapots are under pressure. You're going to see a little bit more stay within West Africa on the floating side. So even though we'll get a pullback, it'll still be at seasonally adjusted highs. Middle East, we're seeing again that elevated level, and just based on these new cargoes increases for the OPEC meeting, that's going to keep them elevated in general. Europe, it's something where we saw some come out of storage onshore, floating. This is going to kind of be that push back and forth that we're going to continue to see, and this should continue to follow that 5-year average in general. Now, when we look at Shandong, Here you can see, again, seasonally adjusted highs that we don't see that changing, especially as independent refiners run rates come down. And then when we look at just what's happening in the fuel oil stock level, you're seeing this push back to the highs, seasonally adjusted highs, which it speaks to export market as well as what's happening with the demand levels. So these are some of the pressures that we continue to see. You know, some of it has gotten a little bit better on the physical oil side, still not great, but better than it was. India and other Asian slowdowns will be the headwinds to that. But then China, it is a bright spot on the oil side, but will be that net detriment to the export side on the refined products. We starting to see those increase in the back half of April, but April so far, as you can see from some of these levels, still remain elevated, and those will start to come down. So if you have any questions, please let us know. We love the back and forth. If you have any questions on, Merbank or other physical flows, these are some of the key things that we look at to see what is going to happen in the market going forward. So thanks again for watching. I'm Mark Rossano, founder and CEO of C6 Capital Holdings, coming to you from Primary Vision Network.